Hey, good morning. Let's go over today's trade plan. So, as discussed in Friday's recap video, we had strong support at the 81.75 area. We have an open gap and a naked VPOC there, and that was an area that was highlighted as a spot where we could get a 20-point bounce. So that idea has already played out in the overnight session. At this point, heading into the open, we could see some continued buying, but as ES heads higher, it is running into resistance from Friday. So we have the first resistance area at 06 quarter to 0875, essentially the bottom of the balance from Friday's trading, and that's a spot where we could get some rejection on first test and at least some rotation, because bigger picture, we were just so oversold and coming into a really good support zone that resulted in a decent bounce. And at this point, we can test 06 quarter to 0875, perhaps get some rotation, some rejection there. Beyond that, we have resistance at 14 to 16, and even this zone is possible today on the day time frame. Now, because overall it's a very mixed context, right? The market testing bigger picture support, but then bouncing back into resistance, it could be a two-sided or balanced type session as the market kind of consolidates this big move. So, at this point, we do have to be careful and very selective on where we enter and where we trade, because on the upside, this 06 core to 0875 is the first area of resistance, but it doesn't necessarily have to cap the upside. So, it's a spot where we can attempt a short, but then we want to see some quick rejection if we're really going to hold that short down into the 93.75 to 95.75 zone, or even some of these prices near 1900 where the market balanced overnight. So the reward to risk is decent at pre-market resistance. It's a spot where you can get in with a two and a half point stop roughly, and look for a move back down towards 1900, 1899, something like that. And beyond that, the next area is 14 to 16. Expect some selling to happen over there. And again, we'll probably be entering these trades expecting at least some level of rotation, and then we'll have to gauge what the market's doing in real time to figure out, where that target can really be, and perhaps scale out of the trade for a few points to reduce risk, and then look for a extended target. Because on the downside, even though we've seen a pretty decent bounce in the overnight session, we could quite easily pull back and fill the gap at 94 quarter, and even test the 87.5 to 89.5 initial support zone. So right now there's potential to continue heading higher up to initial resistance, or pull back and test initial support. And that's why we have to be careful and selective on the day time frame today, because the market can quite easily move 15 points higher from here, and at the same time it can just as easily move 12 to 13 points lower and test the support zone from the overnight session. But bigger picture, the market is testing some larger time frame support, and we have to be careful even on the short side. The shorts have been working really well for the last few days, but at this point the market is testing a bigger inflection point, and we could get some better buying off of that area. And like I said, on the upside, move up to 14 to 16 is very possible today. So because we're in this middle of range right now, that's why we have to be careful, and it's going to require a pretty close read of the market in real time to identify spots where we can enter. As long as the focus is on reward to risk, then I think that will guide you and let you know where it makes sense to enter long, and where it makes sense to fade the market. But just be aware of the overall context that we are coming down and bouncing off of a larger time frame support idea. So on the upside, 14 to 16 is very doable. 06 quarter to 875 is a near-term objective, and above that, the resistance zones, again, we can still get rotation at those zones. So in the event that we break through 14 to 16, we can still get some rotation and some rejection first test of 1920 and the zones above as well. So those are the main ideas heading into the open. Also keep an eye on the other markets. TF was the weaker market, and it pulled back the most. So if you see a lot of buying coming into the Russell, and TF leading the way higher, or at least not showing much weakness, then that would be a reason to be cautious on the short side in the S&P as well, because overall ES has held up relatively well, and Q has held up relatively well. So those markets can accelerate a little bit better on the upside. But as long as TF isn't selling off, that would be enough of an indication that we could get some continued buying in the S&P. So today is going to be a bit of a close read in real time, just because we could be trading in a wider range. But as long as you're trading at the key inflection points, we should see edge in both directions. And at this point, the downside at 81 to 84 short term, that could be it. We may not go much lower than 81 to 84, so just keep that in mind if taking any shorts at some of these prices around 1900 or anywhere up here, that the downside short term could be done at 81 to 84. So of course today is going to be the big test to see whether that idea holds. But those are the main thoughts heading into the open. Let's see how well the buyers can maintain control heading into the open, and we will take it from there.